All right, welcome everyone to our weekly webinar. Today's topic is the new non-QM normal, successful sales strategies with non-QM programs. My name is Carl Holman. I'm the Manager of Communications here at A&D Mortgage. Joining us today is Carlo Biancanello. She's one of our top wholesale account executives. I'll go through the ground rules here first, and then I'll turn the microphone over to her. All right. So if you're a regular participant in these webinars, we mute your microphones and we ask that if you've got questions to use the Q&A function of Zoom. And you can raise your hand when you let us know, but we would also like you to just reserve the questions to the end of the sort of the formal part of the presentation, which usually goes anywhere 10 to 15 minutes. And then we'll open it up to all the questions. Other than that, again, this is Carlo Biancanello. She's one of our top AEs, and she is one of our, again, top producers. She knows everything about non-QM, and I'm going to steal your thunder a little bit, but fancy financing is what we like to call it. So with that, Carla, go ahead and take it away.
Hi, everyone. Thanks for joining the webinar. I am going to take back that little bit of fancy financing is what terminology that I've used and created for this non-QM lending that we do. So I like to specialize in that. And usually it's on my voicemail. I'll usually answer the phone, fancy financing. So a couple of things. And now I'm going to tell you why I call it fancy financing and how it inherited its name. Just to give you a little background on A&D Mortgage, we specialize in non-QM, and that is our forte. So we are a full service direct mortgage lender, and we do offer all programs, conventional as well. We're based out of Florida, but our specialty is definitely non-QM, and that's where we pride our focus on. We are licensed in at least 20 plus, 30 plus states, and we also allow for certain programs for non-QM. When you're an investment property, you are able to deal with us on a investment only level, where if you have an LLC, you are able to submit loans to us through your LLC, not just able to receive business from mortgage brokers or mortgage bankers. So we do wholesale, we do correspondent, and we do service all our loans as well. So our business comes through our broker channel and our wholesale channel and our correspondent channel. That's how we get our business. So we're here to educate you and keep you guys up to speed on the ever-changing market, and especially the big changes that have happened recently in it. So AD, again, as I mentioned, is special in non-QM. That's our forte, and it is predicted through the Mortgage Bankers Association that non-QM for the year of 2022 should hit originations across the country to all lenders, close to a 2 trillion number. That's, estimated at 1.73 trillion in non-QM loans. And we heard these numbers at the early end of last year and was a little, wow, it's a big jump from 2021, but it's holding true because the rates went up recently, especially in the conventional world, and some of the investment properties, our rates and product line and flexibility with the underwriting is more advantageous and appetizing for a borrower than utilizing a conventional mortgage, which is, much more strict. So fancy financing and luxury lending, because of course these mortgages are geared towards the higher loan amounts as well. So a non-qualified mortgage is a home loan designated, designed to help homeowners, first-time home buyers, refinancing, and so on. Some of the parameters that are needed and required opposed to a traditional mortgage. Number one as well, you do need to have income, good credit, assets, and there's always debt ratio that's calculated on these loans, except for one of our programs, which I'll get into detail a little bit later. Fannie and Freddie are very, very cookie cutter. You have to follow strict guidelines with them, as you know, an AUS or an LP, and whatever the findings show up is a common term that the mortgage brokers are used to. That's what we're bound to as well. So when we originate those loans through the mortgage brokers, we're bound to that AUS or LP as well, which is the Fannie or Freddie underwriting method. So there's no flexibility outside of that. A non-QM mortgage, although we write our own guidelines, so we are much more flexible with getting deals done to be outside of the box. So it's fancy for underwriting, it's fancy for financing of it, and it's fancy for income and other unique things I'm about to tell you. So again, qualifying mortgage is a traditional conventional Fannie Mae mortgage, and it's standard with little flexibility and very strict with DTIs at like 43%. So really not fancy at all. You have to be a real in the cookie cutter customer, usually 20% down on loans. Yes, of course, you could put less down, but the least you put down, the less flexibility you get. And with us, the more you put down, the more flexibility you're going to have as well with the non-QM. So not fancy, very boring. And just to go over and dispel some of the myths of non-QM, it is not a subprime mortgage and it is not a stated income loan. It is alternative documents that we require. So it is designed and geared towards a self-employed borrower who might not be able to show all their income on tax returns by normal standard means. So we will allow alternative documents. And just to reiterate again, the myths and misconceptions of non-QM is that it's a subprime mortgage, that it's a stated income loan, it's only for investment properties, and it's for customers that have bad credit. Not the case at all. We are flexible in those areas where your credit could be a little less than perfect than conventional allows. But again, if your credit is not good, and you're going to have a much higher rate than the standard program. So we want the customers that just need an alternative document provided other than your standard income documents, and we'll be able to assist you. Not that your credit, it's just that you have bad credit and you're doing a no income loan and that's what you should submit to us. It's not the way it works. But I think everybody on the call, I'm hoping, realizes that, but you never know. I do need to reiterate that. We don't want the tough deals. So here's some of the programs that are available that can help customers. Number one, the first most popular today, and the popularity of the programs do change depending on the market, but it's called DSCR. And DSCR stands for Debt Service Coverage Ratio. And this is specifically and only for investment properties. So a customer can refinance or purchase an investment property, 1 to 4 family, up to an 85%. 85 LTV will be for the one family only. If it's a 2 to 4 family in this program, it's capped at 80 LTV. And the way it works is that whatever the market rents that the appraiser states when the appraisal is done on that property is what we use to qualify the borrower. So there is no income needed or required to be put on your application in this program. It is just based and qualified off the rent roll of the property. You can do 85% for an investment property on 1 to 4 family, but you then, if it's a 2 to 4 unit, you need to be providing income documents. It's not solely done off the rent roll. So that's in our different matrix. That's in a super prime program. So I just wanted to stress on that. So for the DSCR, where there's no income provided and they're doing it just off the rent roll, it's a 1 family for purchase, you can go up to 85. If it's a 2 to 4 unit, you do 80. If you're able to provide bank statements or a P&L or income documents, then you can do 85% for an investment property on a 2 to 4 unit. P&L at 85. This is one of the first of the alternative documents that we do allow and require for a self-employed borrower in our programs. And what this is it's a profit and loss statement that is needed to be completed by a CPA, tax enrolled agent, or licensed tax preparer. That's it. Nothing else is needed. No bank statements to back it up. We don't require tax returns. The bottom line number on that P&L is the number we're using to qualify your borrower. We can do it for 1 year or we could do it for 2 years. 2 years will get you 85%. 1 year P&L will get you 80%. And again, that P&L is for today back. They would like the most recent 24 months rather than the last 2 years and then a year to date. You can do either, but again, it's typically for the last 24 months or 1 year from today back. Next program, most popular across the industry, I would say, but we still have our flexibility and we do it better, is our bank statement program. We can allow a minimum of 12 and obviously a max of 24, and you can go as high as 90 LTV on these programs. And yes, for primary residences as well, not only for investment properties. Same for the P&L, can be a primary residence. That is our main good thing. We're just dispelling one of the myths that people think the non-QM is only for investment properties, maybe with some lenders, but not with us. So we could do bank statements again up to 90% for that. And we take the average of the deposits on business bank statements, and we use that to qualify the borrower. Typical guideline is 50% of those deposits, as the other 50% covers for overhead and expenses. Now, if you need, you can use more than 50% of the deposits. We would just require a CPA expense letter that will tell us what your expenses are. So example, if he says your expenses are 20%, we will use the borrower's expenses are 20%, we will use 80% of those deposits, just as an example. So there's flexibility there with our bank statement program. The one thing I do want to point out and bring up to your attention is large deposits, transfers, and NSFs or insufficient funds will pose an issue. So please review your bank statements before submitting the loan to us, because that will change the program, cause an issue. You may need to submit an exception, could drop an LTV and increase the rate. So you do always want to make sure that if you're looking at bank statements or having them as your income documentation for the loan, please be sure that they're pretty clean and smooth. There's not any of those three items I just mentioned. Next program is our asset utilization, becoming more popular these days as well. We will allow, we take all the borrower's liquid assets, 6 months of their statements, whether it's stocks, savings, checking, retirement money. We use percentages from each. We'll get you to a grid on that. I'll show you as we go into the next slide as well. And we use just the liquid assets that this borrower may have to calculate a debt ratio and use for income and qualifying purposes. So we cannot and do not, again, need tax returns or additional income docs. This program I've seen designed for some people who that may be semi-retired or retired, and they're heavy in assets, but they're not, they don't have monthly income coming in, or they only have, let's say, Social Security coming in now. So it's a liquid asset utilization calculation. And that, again, primary residences are okay. Investment properties, 1 to 4 family, can go to 80%. Next product is your foreign nationals. This is typical for, simply just is what it is. You could do a foreign national with full income or with the Dscr. So full income in a foreign national would be income documents or a CPA letter stating income for the last 2 years, year to date. So either way, they will calculate a debt ratio. One of the underwriting guidelines and parameters is that the borrower obviously needs to prove residency abroad. Otherwise, he's, by terminology, not a foreign national. And this is only for investment properties in this program. So you cannot be a foreign national and have a primary residence loan. You're doing it as an investment property. I can get into more details on that with Q&A after some of the guidelines as well. Next program is our VOE program. This is designed for a borrower that might be working for a small company. Okay, this is a salaried individual, and they just don't have ADP or the typical, they're not a large firm that issues paychecks and pay stubs. We will take just the VOE from them with income filled out on it for the last 2 years, has to be at the same company, and that's maxed at 80 LTV. Next is our 1099 program, which is a one step further, or I would say one step further from your VOE and one grade down from a self-employed borrower providing a P&L or bank statements. This is for a borrower that's 1099. We can go to 90 LTV. The requirement is that they do have 2 years at the same company as well. The trend is always everything should be 2 years, pretty standard with any mortgage underwriting. So keep that in mind as well. But here on the 1099, we'll use the face value of the 1099 and average that for 2 years. Again, all programs here, just to recap, are 1 to 4 family residential properties. We can do condotels, we can do condos, and PUDs as well. So that is that for some of the niche products and programs and how we may do it better than the competitors out there. Technology, how is it making non-QM easier? How are we making it easier for you and more enticing? We have a quick pricer right on our homepage where you can go in and put in your scenario and it'll give you the rate. You could choose the state as well. You could choose a prepayment penalty if it's an investment property. And then you're able to toggle with the rate and the points or discount points or lender credits to a borrower if you're looking to buy down or buy up the rate. Social media ties in here with our AD Studio, where we do have an entire marketing platform for our broker partners where they can go in, see all our flyers on all the programs that I just mentioned, and incorporate your own logos and company information so that you're able to post on social media or send out mailers or emails to all your database of lead sources and clients as well. And then last but not least, our ADM system, which is our new portal that is up and running for submissions for you to submit your loans through, upload your files, import credit and upload documents and deal with our support staff and processing and underwriting to get your loans to the table with a very smooth, streamlined, easy process from start to finish. We do the disclosures for you as well. So you'll see all that. Some sales strategies for potential non-QM borrowers. I hear from our partners, brokers, where they get their sources, how to advertise. Number one, as I just mentioned, social media is the biggest place for leads now as well. But your non-QM borrower should be designed and targeted towards a self-employed individual that might own companies and own businesses, high net worth individuals. They don't always report all their income, or they might have issues getting a mortgage by the traditional means. Borrowers that have significant liquid assets, again, retired people you should always check with. They might be looking for a mortgage as well, but don't have income. They have other sources that we'd be able to help them with. Again, non-traditional income sources. We can do loans up to 4 million. That's in our guidelines and in our guideline book. Above that, case by case, I have closed a few loans above those numbers in the recent years that I've been here. So always check with your account executive if the loan is warrantable to have an exception made. Real estate investors, realtors, those are people to also go after because themselves, they may need a mortgage, especially for, let's say, our Dscr program, but they're also selling and buying homes and dealing with a lot of people that might be a good source of additional leads for you as well. And the foreign nationals, they are usually grouping together sometimes, I would say. So, you know, with somebody that you've done a loan for recently that a foreign national, they might have friends and family that you'd be able to help as well. Again, how to qualify and actively market to AD mortgage. Again, as I've been mentioning, I feel like sometimes it's repetitious, but the more I repeat it will be good because it should sink in your head. It's all fancy financing, whether you're qualifying it, going after those individuals. If you're going to use my tag, you have to ask for it. I do have a patent on it. Just kidding. So the target the right non-QM clientele is discussed with, again, business owners. Anywhere you go, any people you deal with, think of your neighborhoods, any businesses you deal with on a daily basis. Talk mortgages. You never know. They might say, oh, I can't get a mortgage. And there you go. You have a lead right there. Cryptocurrency can also be used today. I wanted to mention, which I forgot. You can leave it in crypto currency and we'll use 90% of it. It can be used for down payment and closing costs on your loan, and it can be used in our asset utilization program. If it's converted to obviously US dollars, we will use 100% of it. And just to recap, I would say the simplest, least documentation, easiest loan, even if you were used to doing bank statements, but now you're going to switch it and do a P&L. Especially if your bank statements don't look so cookie cutter or might pose an issue to the loan, is our P&L program. On letterhead from the accountant, CPA, or licensed tax preparer with their license number and information and their expenses versus their profit on that form. The bottom line number is what we're going to use to qualify. Simple one-page P&L, most popular today. So see if that's able to be done. Everything I mentioned and everything I discussed, I'm just going to run through this quickly, is right here in front of you now. This is our little niche sheet. So Prime Jumbo is a standard Fannie Mae conventional loan that we offer for high balance loans, but that's full income and straight normal income docs, and a DU is run. Super Prime is our program that has all of your products in there. That's the CPA letter, the bank statements, the asset utilization, the VOE, just the P&L, or just even the 1099. Prime program, same program, they mirror each other. The difference between Super Prime and Prime is Prime allows for less than more credit issues, and a recent credit event being about a year, and that could be anywhere from lates on the mortgage or foreclosure or bankruptcy. So we'll still do it. It's just you're going to have lower LTVs, higher rates, and you get pushed to the Prime program. Here's your Dscr, which states all the things that I've been mentioning. You can do cash out refis on these as well. You're capped at 75%. And also wanted to mention Dscr. One of the niches that we do have is if once the appraisal comes back, if the rents don't cover the property, we still can do the loan. You just reduce, you get a reduction in your LTV, and your rate gets is a little higher than a customer who does qualify with the rent roll based on the appraisal. So keep that in mind. Reach out to your AE or me and ask those questions when you'll see the difference in the pricing. But the loan can be done if the rents don't cover it, because they are taking on the understanding that once they rent the property, they are going to collect higher rents than might be typical. They're going to improve the property. We know everybody's not going to buy an investment property. That's not going to profit them. Why would you buy it, right? Condotels are allowed here as well also. So keep that in mind. That's really about it. These are just your little cheat sheet there. A typical loan scenario here is just, for example, for a Dscr program, the borrower is purchasing a 3-unit. We can go up to 80 LTV, and your loan amounts can go up to $4 million here, but it's this example showing 540. In the bullet points of it is you're not putting income on the 1003 as a reminder. No employment needs to be listed, no dollar figure. So, and leases are not required. You do provide a lease is another way to possibly prove if that borrower is coming with the property to make the rents cover for a better price. Again, more detailed, elaborate underwriting that we need to discuss and go over, not to do too long quickly here on the call. That's it, typical Dscr scenario. And then a self-employed scenario, US citizen that has several investment properties, some free and clear, some not, high credit score, they don't file tax returns, or they do file, but they don't show enough income, or there's too many deductions. He wants to refinance and cash out for free and clear property. That's fine. You can go up to 75% for cash out on these investment properties. And that's it. Final thoughts for the non-QM. Again, no income required. Purchase or refis. Alternative income documents are used for business owners to qualify. Mortgages for ordinary to the extraordinary, I'd like to say, along with the fancy financing and luxury lending. So look at our homepage and you'll see there all of the quick pricer, guideline book, appraisal center to order appraisals, anything that you might be needing to get the loan through the system. Please look there. You'll find a lot of information on our homepage that'll help. Contact your account executive in your respective areas and they will assist you. And now you have all the reasons and see why I call it fancy financing. So just wanted to say thanks for listening. If you have any questions, let me know.
Yep, we'll get to the questions in just a second. Let me cover a couple things to wrap up the afternoon. Just to reiterate a little bit what Carla had said, we do have some tools available to help the brokers. We've got the quick pricer she's mentioned where you can price out your non-QM scenarios pretty quickly and easily. The interface is easy enough that even I can use it. We've got the A&D Appraisal Center, so that's sort of a one-stop place where you can manage all your appraisal centers through the various AMCs that we have approved. I think we're somewhere in the range of 15 or 20 at this point. And then AD Studio as a web-based marketing design suite. We offer trainings on those about once a quarter, once you're an approved broker. It's fairly intuitive and user-friendly as well. So you don't need to have a graphic design degree to start making things look professionally. And again, every week we do these webinars at 1 o'clock on Eastern Standard Time. So next week we're going to be covering the Jumbo and Prime Jumbo programs. The The week after, we'll give you sort of an overview of the correspondent lending that we do. And then we're going to do another deeper dive into the DSCR loans. And then we'll announce some other ones after. I know one of the questions that we always get is whether these webinars are recorded. The answer is yes. They are posted usually within 24 hours. Sometimes it's before the close of business California time, but they're available at the AD Learning Center. And the web address is admortgage.com/learning-center. You'll also receive an email if you registered for this webinar afterwards that will give you a direct link. And there'll also be a very brief 5-question survey. We like to get feedback. It also helps to get additional topics for future webinars. So if you've got any ideas that you'd like to hear us talk about, we'll be more than happy to put together a future webinar around it. As Carlo mentioned, we are on social media, so we've got a few different platforms we're on: Facebook, LinkedIn, YouTube. We're on something called Telegram, which is similar to WhatsApp. You can download the program from Google Play or the App Store, and then just subscribe to admortgage.llc. And then we've got 2 non-QM exchange forums that we're panelists and participants on, where you can run scenarios by and get in touch with some of our account executives if you need sort of quick answers. And with that, I will turn the question portion over to Carla. Carla, can you see the questions, or do you need me to read them to you?
I don't see anywhere. No,
Okay.
like where would they?
Yeah, the Q&A, if you put up the
Oh, let me go
Q&A.
down there. Okay, I see. If the first question is, if the state allows, can you produce a business purpose DSCR, although we are not licensed in the state? Yes. So I'm going to type, you want me to type the answer in?
No, you can just keep going down the questions.
Okay, so yes. For how long is the average deposits taken from business bank statements? We use up to 12 to 24 months, depending on better rate at 24 months.
Okay. Next.
How do you have an ITIN loan? No, we do not, but check if it could qualify for a foreign national. We don't offer the ITIN program at this time. And what's the maximum number of properties that can be financed? Hey, James, this is Carla. I'm in your office today, by the way. It can be financed with DSCR for one client. We usually will, the guideline is 5 million will be lent to one borrower is the guideline on that. So we don't traditionally have a max number of properties. It just needs to make sense. So I'll discuss that with you a little further. I would say not more than 8 to 10, I would say. And can you use Airbnb, I'm going to assume, in place of the 1007? Short-term rentals are not favored because, again, they're just that. They're short-term rentals. So it needs, the 1007 rent schedule needs to have average rent for the area.
Okay. Go ahead and if there's any other questions, go ahead and keep filtering them in.
Okay, sorry, I thought you had a typo, but again, short-term rentals is not favored at the moment.
Okay. I'll have to look up the Air DNA.
We can use crypto. Cryptocurrency can be used for down payment and closing costs now in all purchase programs of non-QM. And for the asset utilization, where we take in the asset utilization program 6 months of liquid assets from the borrower to calculate income. If it's crypto and they leave it in crypto, we're okay with that. We use 90% of it opposed to 100% of it. So that's really the only difference. So it's either going to be asset utilization for income, or it can be used for down payment and closing costs.
Okay. If there's any more questions.
Last year, any programs for a customer on last year of Chapter 13 BK 590 FICO? So 1 year is our threshold for a recent credit event. So if it's a year old that they're out of it, you can do it in my Prime program. 590 score is going to cap you at probably about 70 to 75 LTV. So if you're on the quick pricer and it says mortgage history or recent credit event, you want to do 12 to 24 months opposed to the 24 months plus, because our main program, Super Prime, just requires poor credit or a recent credit event to be 2 years out. So less than 2 years would be our Prime program. So the answer is yes. What solution can we use for a borrower that has an ITIN? You can't, if it's no social or they do have a social for our foreign national program, that's the only way it could be done. If they have an ITIN number and they don't have a visa or a passport, we cannot do it. So I should have mentioned earlier as well, the foreign national needs a visa and a passport. ITINs don't need either. So that's why we can't help the ITIN.
Okay. These are good questions. Keep them coming, folks.
That's it.
Yep, I think so. Let's give it 30 seconds more in case people are typing.
Thanks again for listening. I truly appreciate it. I will say sorry if I rambled a little bit, but I can go and go and go.
Yep. So I'd say at this point, we'll call it. There's no other questions that have come in. So again, thank you everybody for attending. We look forward to seeing you at some other future webinars. And don't forget to take your brief survey after we close the meeting.
Thank you.
So have a great day, everyone.
Thanks again for listening. Bye.